The thing about going live, Pat, it says we're live right now, but I never really know exactly when it goes live because there's a little thing that it spins and then it says, and it goes away. So I assume that's when we're starting. So happy Friday, Pat.
Hey,
and,
Rick, how you doing, buddy?
Friday to our millions and millions of viewers. Now we are violating our after 3 o'clock rule this week. And normally we don't like to do that because there's a lot of kids at home, doing online learning. And we just don't want to suck up all the internet bandwidth with our millions of viewers. So we're taking a chance here. But Pat has a high upscale meeting today, later on in the afternoon. Hit them long and straight, Pat.
Yep, I will.
And so we had to move it up. But as you can see by the scroll on the bottom, if you subscribe to our channel and hit that little bell, you'll be notified every time we go live or anytime we put a video up. And it just notifies you on YouTube. It doesn't send you an email. It doesn't make your phone ding. It just gives you a little notification when you're on YouTube. So subscribe. Anyway, Arizona real estate, Pat, this week, the more I look at it, the more it remains the same.
Yeah.
I can't find one number that I can quantify to tell you that there is a change in trends. Not one. Guess what our listing count is today?
8,100.
Just about 8,200.
Okay.
And guess how many homes went under contract this past week?
About 4,000.
4,000. I mean, isn't that ridiculous?
You didn't even. I'm just kind of going off old data.
Yeah, and so there isn't a change. Now I did a video yesterday and got a little pushback from a guy. And Jane, we're going to answer your cash question today. You had a question about cash, so hang in there. We're going to get to you. So I had a little pushback where I was talking about, I looked up on Showing Time the number of showings that we had in Chandler in 7 days. So it's these long blue graphs, right? And the longest line was between $300,000 and $399,000, $399,000. We had 573 showings in 7 days. So I looked up how many listings we have available, and we have about 70 in that price range. So that's almost 600 people looking at 70 listings. And the pushback that I got was I made the comment that said, if you're concerned at all about COVID, and you look at how much traffic is coming through your house, no wonder people aren't putting their house on the market if you're worried about that. Because that's a lot of footprints. And his pushback was, there isn't a shortage because it's COVID. We've got all these people moving to Arizona because the weather's nice and this and that. And look how many people are, bringing their jobs over here. And I agree. I agree that there are people moving here, but the inventory shortage is a national problem. It's not unique to our area. It's the same problem in Cleveland.
Yeah, in Oshkosh. I was up in Wisconsin this summer, and they had the same problem in Oshkosh, Wisconsin.
People are not putting their homes on the market.
Yeah.
Yet the buyer demand is so strong that when that price range comes up, that's kind of being gobbled up right now. That's a staggering number.
Yeah.
I tried to figure out how many people that is per day that's going through your house. And you can analysis paralysis yourself out of that. But
I had a guy. Did I tell you about, just to jump in? I had a buddy of mine who had his house listed, $1 million home up in 44th Street in Camelback there.
No.
And this is a couple weeks ago, and I talked to him. He listed his house for 1.1 million. It's right on the corner of 44th Street in Stanford, just north of Camelback. And he got an offer $50,000 more over the 1 point. He got 1.15, and I asked him, I go, how many people did you have? The first. He goes, Pat. He goes, I think when we opened up the open house, he goes, I stopped by the open house for an hour, and there had to be at least 30 people that went through the house in that hour. And he said, I thought he was joking with me, but he said he probably had at least 200 to 250 people go through the house.
Wow.
On a $1 million property. and he sold it the first day. I mean, I think in 2 days they had it wrapped up. He said it was ridiculous. On a
Well, the
1.1,
stock market was good in August, and people are buying in September.
yeah.
So there is a lot of movement in that price range, particularly in you look at it, if you've made a lot of money, in the stock market, and you're now at a point where you can relocate, they're pulling the trigger now. They're saying, I don't have to live here. I think I'll go, to Arizona, or I think I'll go to, to Idaho. And so there's a ton of that going on. And it's being fed from, places like California, but eventually California, nobody's going to be buying their homes for them to be able to buy our home. So it's going to be an interesting one to watch. But so let's talk about Jane's question. Jane said, I'd like to hear you guys offer some insight about the advantages or disadvantages of buying home in cash. And are there advantages for that? And the short answer for me as a realtor is yes. Cash is always king. If I'm presenting offers and one of them's cash, it means a couple big things. One, it means quick close because I don't have underwriting approval to wait for, and I don't have an appraisal to wait for. You show proof of funds. It's just a matter of getting title to prepare the documents for signature, and then working with the seller to determine when they want to move, or if the house is vacant. As soon as you can make it happen, you can make it happen. The only holdups you usually see is sometimes the cash is in a fund where the money has to be transferred to your account, and because the amount's so large, the bank puts a hold on it, and you're waiting, and the hold can be long as 5 to 10 days, longer if you're from another country. But to get an offer accepted in cash, yes, cash is king. But maybe you don't want to use all of your cash. What do you think, Pat?
Yeah, I mean, it's a very advantageous for the agent to, for the quick close and the client. But, from a lending standpoint, obviously, we hate cash deals because we don't make any money. That's number one. I'm just kidding. But no, honestly, I see somebody, if I hear somebody, say, hey, we're gonna pay cash for this, say $500,000 home. What they're really, a lot of people say it's safer, to pay cash, but what they're truly missing is the leverage standpoint, and that's good leverage. When you're taking buying $500,000 home, instead of paying cash for it, saying, okay, I'm going to put 30% down, $150,000. And taking that other $350,000 and investing it, and not put $150,000 down and leveraging, taking a loan out for $350,000. If you can get a loan at 2.875, 3 3.25, 3 1/8. I mean, the market with the rates being so low, the power of leverage is so high right now. Because people go ahead, say, plunk $500,000 down in cash on a house. Honestly, I mean, the straight honest answer is that's kind of dead money. Your house is appreciating, but you just basically put your $500,000 and you might as well just put into a savings account, because that's how it's kind of working. I mean, even though the house is appreciating, and like I said, the big thing is power. The word is leverage. It's good leverage. It's good debt. Now, if rates were at 9 or 10%, 11%, and like back in the 80s, and the market was only giving you 5 or 6% return, yeah, then you pay cash. But
so you're putting this much money down to control an asset that's this much.
Exactly. I mean, yeah, on a $500,000 home, you put 20. You're putting, that's what people forget is. It's like unlike the stock market, you put 20% down on a house, on a $500,000 home, that's $100,000. So for $100,000, you're controlling a $500,000 asset.
Am I going to need an appraisal if I put 20% down?
No, a lot of cases now with Fannie Mae and Freddie Mac, if you put 20, I've gotten the last couple of months, I've had, I think, 3 deals that put 20% down, and I got property inspection waivers on them. Freddie Mac and Fannie Mae now have a thing. If you put 25% down on a purchase, chances are, and that's not always guaranteed, but I'd say 7 out of 10, 8 out of 10 times you're going to get a property inspection waiver where you don't have to get appraisal. So the power of leverage is very, very powerful. And that's what people, they think that it's safe. If the market goes down, your value of your house is still going to go down. So, you got all that cash that it's kind of a moot point. But I think the big thing here people forget is leverage, good leverage, good leverage, good leverage. And I think, like I said, being able to control an asset, $500,000 asset for only $100,000. And that's the beauty of, obviously, real estate. Going back even to a smaller sample, somebody buys a $300,000 house and they only want to put 5% down. That's $15,000. For $15,000, you're controlling that $300,000 asset. And if you were going to the stock market and buy $300,000 worth of stock, you pretty much have to buy 300. You have to come up with $300,000 worth of stock. That's what the beauty of. That's why the average person has been able to make a lot of money in real estate. Is they got $10,000 or $15,000, $20,000, but you're buying such a big asset, and that's the beauty of it. And like I said, I think there's a lot of people that do pay cash. There's a pretty good percentage. I think percentage I saw one time was like 25%. You've probably seen that number too, 25, 28% cash deals. And, and a lot of times too, a lot of people, that are buying a bigger home. If you're in the $1 million, $2 million, $3 million market, a lot of these people take their money out of the trust account to pay cash, because in a lot of instances, people that got that type of money, they might be a self-employed business owner. They might have 3 or 4 rental properties. They might have a sub-S corporation, LLC, couple of LLCs, and they feel like getting all the paperwork together is really kind of a hassle. So they'll just pay cash. That's what I see sometimes. So,
well, the other thing too is that while it may not be as easy to get an offer accepted with a large down payment, it's also a great advantage. I mean, if I'm going in and I've got cash and I've got a 20% down payment, that's still a very easy offer to get get accepted. I just say, look, it's almost cash. I mean, the loan approval is much easier. It may be able to close quicker because you don't need the appraisal. You might not. Of course, if you put even more down, you're not going to need an appraisal. And if it doesn't appraise, you're still covered. So if its appraisal is $5,000 short, nobody has to pony up anything because you put so much money down as a down payment. Whereas the 5% person come down, sometimes the appraisal comes down $5,000 short, the deal dies.
Yeah. Exactly.
So there's a lot of pluses in a large down payment.
Yeah, I just had a recent last week. I had this gentleman that I told you about last week that was looking for over a year that finally had to take a house, that was $450,000, and he had to bump it up $30,000 to get the offer accepted. But he got his offer accepted because he was putting 20% down. That was a big key point. Yeah,
so I know the condo that I had listed, I've spoken on here. We have an offer, and it's cash, and that's nice because now we're not sitting around waiting for, underwriting or an appraisal. We're just waiting. The inspection is Saturday, and after the inspection, we see how long it takes for them to process it, and we could have a quick close. So there is an advantage to that, and surprisingly, it didn't turn into a competitive event either. So,
yeah. To sum it up, Jane, to answer Jane, bottom line is, yes, it's, I just think I look at people that, like I said, I'm just looking at it from a good leverage standpoint. If you got the money to pay cash, like I said, a $500,000 home, put your, 20-25% down, and, to dump it all into a house. Yeah. Real estate's been great. Once you put that money in a house, it's a little bit harder to kind of get it out. You got to get a home equity line of credit, or, you got to kind of get qualified there.
If you don't put it all down, you've got money for improvements.
Yeah. And you can always, And the thing of it is, once you get situated, if you decide a year or 2 years down the road, I'm gonna pay this off or pay it down even further. I think it just gives people more flexibility. I mean, I think there's a sense of, okay, I got my mortgage paid off. I don't have a mortgage payment, but there's a sense of comfort saying, okay, but rather than putting that, you get the money on the side. If something does happen, you got $350,000 that you can maneuver with. And especially as people get older, I mean, just older people. I'm not going to say an age group because I'll offend somebody, but just say older. I mean, as you get older, I think you have to kind of, I think people want that comfort, that reliability, that hey, I've got my house paid for. But then too, as you get older, there might be something that comes up that, a big expense, a medical expense that you need that, and it gives you more flexibility. And I tell people, err on the side of giving yourself more flexibility than dumping it all in a house. And I even talk to people about, on a smaller scale, say, hey, I want to put, 10 or 15, I want to put 20% down or 50. I want to put, if people are stuck between 0 and 20, not going over 20%, say, I'm looking at putting, 5% down, but I'm thinking about possibly putting 10 or 15% down. I've erred, I tell people kind of the break point on mortgage, the mortgage insurance, if their scores are great, mortgage insurance, on a 10% loan is really not that bad at all. And that difference in 5 or 10% more in down payment, it really does not have that much of an effect on your payment. It might end up being, I'm just throwing a number out there, $50 to $70 a month, $75 a month, but it allows you to keep that cash on the side.
Yeah, I mean, money's cheap. That's, like you say, money's almost free right now. Speaking of loans, switching gears a little bit, what are you seeing on the forbearance side of the business?
I mean, basically, they've come down. They've actually decreased at a very accelerated rate right now. I mean, they fell over 90. They fell by 95,000 loans last week, according to Black Knight, and I guess it's the fifth straight week that they've improved. When they peaked, obviously back in May. So there's still 3.6 as of September 22nd. There's 3.6 million homeowners that remain in some type of forbearance plan. It's about 6.8%, they say. And there are 1.1 million that are set to expire by the end of this month. So they'll probably re-up them. There's no positive on that end.
Yeah, there's no shortage of YouTube videos that say that there's a crisis coming. The forbearances are on their way. Here they come. The foreclosures are right behind. Everything's going to crash. But yet there aren't any numbers to back that up yet.
No.
We're not seeing it. Now, I'm not in the camp that says real estate is going to crash based on real estate fundamentals falling apart. I'm one that says that we have every reason to believe that it could get soft going forward simply because of the extent and severity of the unemployment, not just in the United States, but globally, because remember that affects trade. But I'm also nervous over the entire stability of credit. And so's Fed Chairman Powell, and so's the Treasury Secretary. Right now, huge battles where the Fed is just he's pounding on Congress saying, look, you've got to give some relief to the United States people. You have to give some type of, we need money being spent. You need to give them some incentives. The Fed can only make money available as reserves to the banking system, but he can't inject it into the economy. Only Congress can do that. And there are no incentives because Congress is not doing a damn thing. And if they stick around and don't do anything, now you're hearing things like they're wildly floating the idea of a digital currency where they just deposit money in your account and you've got 90 days to spend it or it's gone. I mean, that's bizarre.
Yeah.
But that tells you how desperate the Fed is to get this economy, to give it some type of injection to get going, because it's really easy for us to have a freeze in the credit market, and that affects real estate.
Yep.
I don't care how good the fundamentals are in supply and demand. If we have a freeze in credit, the party's over.
Yeah. No, I mean, you got the unemployment, you got forbearances. You know what? We have to look at what can create this crack. I mean, interest rates going up. I don't see. I mean, rates have been going down here, but they've been holding very, very steady the last couple months. But one thing I've seen on my end too is, like I said, rates have been kind of in a drifting mode. You know, drifting about the bottom. I don't see them really cracking down, you know, going low that much lower, even though I think they will maybe go a little lower if we see some crack here in the unemployment. But what I'm seeing on my end the last week is there has been, and I see these little drips and drabs and emails from, you know, different LOs in my company complaining about Freddie Mac and Fannie Mae. And I saw this last couple of days is that some of these LOs were saying that, you know, I've been, like this one LO in our company said, yeah, I tried to get this one guy approved on a refinance. He had a 715 credit score, 26% debt to income ratio, and the loan to value was pretty low or moderate. And he got it approved approved ineligible, basically meaning, you know, something. It seems like Freddie Mac, I guess my point is Freddie Mac and Fannie Mae, they have a tendency, they can, when they do their software updates, they'll tighten within a month-to-month period, you know, their credit criteria. And somebody that, you know, I've seen this on Facebook posts, the mortgage-related posts that I have, that I watch, you know, different people commenting, different LOs. They're complaining about, you know, I ran this guy, and this is the problem that a lot of people don't understand is I can take your information 3 weeks ago when I get the loan application, run your information in the computer. It's called Desktop Underwriting and Loan Prospector for Freddie Mac and Desktop Underwriter for Fannie Mae. I can run your information in the computer, and that spits out approved eligible and says, okay, this is, you know, Fannie Mae likes this file, keep, you know, basically I said, likes this file, keep moving forward in the loan process. But lately we're seeing these, you know, like I said, if I run it 3 weeks and then 3 weeks later I run it again, because maybe something changed or whatever, you know, the appraisal came back, I might get approved ineligible. So all of a sudden, you know, things are changing within 3 weeks. Like I said, LOs are saying, I had this approval, I reran it 3 weeks later, I'm not getting an approval now. And that's basically Freddie Mac and Fannie Mae kind of tightening the screws. You know, they can do this. They do this by their algorithms, you know, on a month-to-month basis, depending on how they see the credit markets.
Well, that has to be a heart-sinking moment when you have to make that phone call.
Oh yeah, I mean, I haven't had to make it, you know, too often, because you can tweak something in the system, maybe, you know, this or that. But you know, if the credit score, like it's 715 credit score, that's kind of borderline, because typically you want to see 720, 730, 720, and 740 are kind of the break points in terms of credit. So when you get into that low 700, high 600 credit score, that's where I'm seeing some cracks in the shining armor.
Well, it's a trend to watch, and a credit freeze doesn't happen over a gradual process. It's usually a huge catalyst that's on the evening news, and party's over, and there's no running for the exits. That's an impossible thing for us at our level to predict, but something that I'm watching carefully to see if there's any charts because, you know, no matter what you look at, there's usually some kind of precursor of a bond market going this way or that way, or credit tightening that shows up in a graph. But for the average Joe, it's going to be just like Lehman Brothers. You know, Lehman Brothers announced that, you know, they're going belly, and the whole system cracked. So they're really trying to avoid that at this time. And there's no shortage of articles that shows that we've approached that several times, but we've also never injected this much liquidity into the system worldwide. So nobody really knows how this is going to play out. But then I ran across a great article on your Mortgage News Daily.
Don't give away my secrets.
Well, this one is good because it pretty much matches what you've been telling me, and that is are you thinking of refinancing? Read this first. Guess what the first question is you should ask? How much will it cost? And you and I have talked about the internet refi people, right?
Mm-hmm.
You know, rocket ship. How much is it going to cost me? That should be your number one question. Ask, not the rate. Okay, here's my rate. How much is that rate going to cost me? So the second question is, can I get lender credit to cover any closing costs? Because sometimes you can. Depends on the program. And then the third says, the lowest rate doesn't always equal the best loan. And I love this where he said, sure, a 2.5% rate sounds sexy and will impress your buddies who just free financed to 2.875. But if obtaining the rate cost you a substantial discount points, was it still a good deal?
Yeah.
And then how much do you owe? How many ways can you benefit? You may not need an appraisal. Don't get greedy. So it's a pretty eye-opening article. And I think the first 1 or 2 points in that is, I think how much does it cost needs to be first and foremost here instead of seeing that sexy rate.
Yeah, because
we all know there's a huge difference in fees, right?
Oh yeah, definitely. I mean, everybody's kind of focused on the rate. Like you said, lenders will, advertise 2% or 2 3/4, 2 1/4. But then you always got to look at the fine print. My goal is to show people the fine print and tell them, none of these companies are working for free. They're not working for free. And we all pretty much get our money from the same area. It's not like one lender's got this pot of gold that they got the cheapest money in the world and they're offering the lowest rates. I guarantee you, like I go back years ago that we talked about rate, speed, and service. Pick 2 out of 3 because you can't have all 3. Because if you want the lowest rate, I'm seeing this right now on the broker side and just the lender side. You got lenders that are offering a little bit lower, maybe a rate that's a 1/4 point lower than the average lender out there, or 3/8 of a point lower. Guess what? I'm seeing these emails. It's taking you 60 to 75 days to close a loan. So do you want to take 75 days to close a loan, or do you want to pay a little bit more and close your loan in say 25 or 30? So there's a cost benefit analysis you have to do too. And the average person just does not understand because they don't do it every day. And I try to really spell it out for people, the do's and the don'ts. And, I want to tell people what they need to hear versus what they want to hear. Because people want to hear, I'm giving you the lowest rate, the lowest fees, and I can close your loan in 15 days. Right now, that's not possible because we've got the lending business, the mortgage side is just swamped. So you're not going to get all 3 right now.
Yeah, it's a little dance, but I think, people, if they're armed with the right tools and the right questions, they can get through it pretty good. So I think, just don't be in a big hurry to jump at a nice, sexy rate. So, you just have to know what kind of questions to ask. And there was also another news blip this week that said that Zillow is going to be hiring real estate agents to work as employees for them to help them buy and sell real estate. And the conversations are all over the board. Oh, this is the end of the real estate agent stuff. And I think it's a great big nothing burger.
Yeah.
I think, and that was there's a great discussion going on with a finance guy on YouTube. People are dissecting that quite a bit. And, Zillow makes 70% of its revenue from advertising to real estate agents. And a lot of people don't know, because I've seen the questions that just say, well, when I get recommended a realtor from Zillow, do they work for Zillow? How does this work? Well, here's how it works, folks. When you're on Zillow and you're looking at that beautiful house, and then there's these real estate agents off to the right, they're just ads. They pay $1,500 a month to advertise in zip code 85251 so that their face shows up next to this house. They don't know anything about that house. The only person who knows about that house is the actual listing agent. So you're just being referred. And sometimes Zillow they have these call centers that you call a number, it calls Zillow, and they go, well, would you like to speak with an agent? And you go, yes. Well, there's agents and there's teams. It's like big real estate teams that pay all this money to Zillow to advertise. So let's say you're going to Joe Smith's Realty team. Okay. The phone call goes from Zillow to the real estate agents in a round robin. If I don't answer it in 2 rings, it goes to the next person. So the first person that answers the phone gets to talk to that potential lead. And I know my phone, when I had it with an iPhone, when it comes up, I could answer a phone like hitting the dot, right? Boom. Because I was getting Zillow calls when I was on a team once, and you had to be quick. I switched to an Android phone. I immediately took it back because on Android at the time, I had to do 2 swipes. I had to open the screen and then hit answer. That wasn't fast enough to accept the Zillow call. So I was missing all these calls. But so the agent that you're getting, that Zillow refers you to, is only because they're advertising. They don't know who they are. They don't know squat about it. They're going to pick up the thing and you're going to go, so tell me about this house on 123 Main Street. And we got to go, sure. And then we're typing like a madman, 123 Main Street. What is it? Oh, yes. And we're just reading you the same thing that you saw. And an honest agent just has to say, you know what? I actually don't know anything about that house, but I'm happy to get as much information as I can. Is this a good number to call you back at? And then call the agent and start digging in and getting all the information and then sharing the news. But that's how Zillow works. I just thought I'd throw that out because it's really making big news this week in the industry.
Well, that just kind of goes along, just to jump in there real quick for 20 seconds. I mean, that goes along with the, on the lending side, Lending Tree. People say, they go to a website, they put in their information. And I think people are getting really tired of this. And they're just trying to go off of referrals, because a lot of people go on the website, they put in Jim Smith, here's my phone number. They put in, typically 9 out of 10 times, they put in a fake phone number or email or right email.
Oh, yeah.
I mean, you and I are both kind of the same thing. Just put in your right information. I'm not going to pound you to death. If you're interested in doing something, great. If not, I'm not, people are afraid of getting hounded. But my point is,
if you put in Lending Tree and you put in your information, you get 800 numbers blowing up your phone all day.
You're going to get 20, 30 phone, there's a couple of companies out there. One company starts with a Q. I mean, they're notorious. If you put your information in, you're getting a phone call within 10 seconds. I mean, they are trained to just get on it and pull your credit right away. And like you said, to go back to Lending Tree, though, the same way with Zillow, people think that they're, getting basically all it is lenders paying $1,000 or $1,500 a month. And they might not have the lowest rate, but then you get 3 or 4 different lenders. You compete, you're competing against lender 1 and lender 2 and lender 3, but then all of a sudden you get into this car salesman, type of attitude where, okay, I'm going to pit lender 1 versus lender 2. And people are going to typically go with, like we talked about just a couple minutes ago, go with the lowest rate. They don't know, that you're doing a buy down of $3,000 or $4,000. So it's all you're doing. Lending Tree, you're sending your information out to 4 lenders and they're calling you.
I had a client go through an online lender once at 7:30 in the morning, and I was having breakfast with a friend, and my phone rang, and it rang, and it rang, and it rang, and I could, I looked at it, and I'm going to get back to it, and because it's not that urgent, and it finally got so irritating. Like the 6th phone call, I said, "Excuse me." I went up and I went outside, and I said, "Dude, stop blowing up my phone. I'm having breakfast with a friend. It's not that urgent. I will call you back."
Yeah, I didn't like that way. I didn't like the way you answered that phone call when I called you that way.
Yeah. I mean, stop, for the love of God. So I understand why people put in, the wrong number, but you do get to see some great email addresses, like, that start with F and end in U. So it's kind of fun, but not expecting a lot of big news this week, Pat. I don't see anything changing in the real estate business at all, but I'm going to keep track of the number of showings that are happening by different cities and stuff, and see if anything pops out. But if anybody has any questions or anything you'd like answered, like our YouTube friend Jane here, just put the question in the comments and we'll get back to you. And if it takes a lot of explanation, then we'll just cover it in next week's broadcast. But Pat, I know you got to hit the road, and you've got some luxury accommodations and a great weekend planning. Do you still need to borrow my tent and sleeping bag?
Yeah, I did.
Yeah. Okay. So, all right. So
we did. The Four Seasons was booked up.
Yeah. I tried looking for something in Munns Park up by Flagstaff 2 weeks from today. Nothing. I mean, everybody's heading for the hills, so you just can't.
Why'd you tell everybody where I'm going? My God.
You just that was by accident. Anyway, if you want to have breakfast with Pat tomorrow. So
yeah.
And we've included a link below. If you want to have coffee with us, we have a calendar link. Just book the day you want to have coffee with us. We'd be happy to see you. So going to say goodbye to everybody, free up the bandwidth for all the kiddies that are in school. And Pat, have a great time. Hit them long and straight.
All right, buddy. Take care, everybody. Bye.